one of the things with our 123 system is our alerts. You know, we send out alerts on the hour, every hour, if there's a tradable, or if there's a 123 that comes up. So I'm not sure if everyone is taking advantage of these 123 alerts or not, but what we have found in our analysis of them is that the win rate is it's over 65+% for the alerts. So that what we're saying is basically if you were to take all the alerts, traded every single alert that came in, you'd be batting 65% or higher on average. So that tells us that the alerts are very powerful. So you really need to take a look at the alerts and see what's going on with them when you get them. Instead of hunting down 28 pairs by yourself, when you get an alert, you can just quickly take a glance at it, take a look at the chart, and see whether or not it's a good 1, 2, 3 setup. So, for example, the last alert, the most recent alert, well, actually, it's not. A couple more have just come in, but this one I have on the screen was for GBP Aussie, 1 hour bottom at 1 o'clock p.m., which is my time, 3 o'clock Eastern time, or 4 o'clock Eastern time, sorry.
Kai has mentioned in the question box, he said that they are very powerful.
Yes, good. Thanks, Kai. Indeed, and I just want to reiterate, I don't know if everyone's really aware of how powerful these really are. This is the entire system. This is the entire 1, 2, 3 system. You've got the automatic wave calculator that points them out for you, and you can put them on manually, of course. But the alerts are huge. They're coming in, and you can take advantage of them. And like I say, with a 65+% win rate, that's huge. If you're winning 65% of your trades, you're going to be making money. As long as your money management is good, you're going to be doing well. So I just want to take a look at one of the trades just to go over the 1, 2, 3 alerts again, just with you. I'll do a couple of them. This one on GBP Aussie, it came in as a 1 hour H1 bottom, so it's a 1 hour bottom, 1, 2, 3 bottom. So the Euro, GBP Aussie, I'm on the wrong one. Okay, here we go, GBP Aussie. And so it's a 1 hour bottom. So again, we have this bar here that's messed up the chart. So I'm just going to make it larger so that you can see what I'm seeing. So, or I could actually drop down to the 30-minute, and you'll see it a lot easier if it'll work. Okay, so this is the 1, 2, 3 bottom that it's signaling at 1 o'clock, 4 o'clock this Eastern time. So what you have to do is, you get the alert, you get a picture of the alert, like this, a chart of it, and you can look at it and decide, okay, is this a viable alert? So the first thing you got to do, you're going to get the chart on the 1 hour time frame. So it's going to be on the 1 hour. So let me just make this big. So you're going to get this chart on the 1 hour, and it's going to look just like this. And you're going to see your golden cross in this case, because it's a 1 hour bottom. And you're going to have to make a decision. Oh, is this a good play or is it not a good play? So what makes it a good play and what makes it not a good play? First of all, if you get an alert, it's a viable 1, 2, 3. So that's the key. It's a 1, 2, 3. What makes it a good 1, 2, 3 is the 3 lines that come with this. It tells us that on the hourly, MACD is up and it's weak. So you look at MACD, it's saying that it's up, meaning that it has crossed and it's going up, but it's weak because it's still underneath the 0 line, or the water line as we call it. So MACD is moving up, but it's weak because it's still below the 0 line. It doesn't mean that this is not a good 1, 2, 3. This is actually pointing to this as being a good 1, 2, 3 because MACD is pushing up towards the water line. And that's what you want. You want MACD to be pushing up towards the water line and separating, because once it crosses, it will become strong. And the EMAs are splitting apart right here. And I've got a 13. I use a 13. I'll delete it because I don't use, I don't use it normally for you guys. So you have the two EMAs crossing, the 5 and the 21, and spreading apart. So this tells us that this looks really good on the 1 hour time frame. So one of the first things I always say is you don't want to just come to the 1 hour time frame and trade this. You need to know where you are overall on the chart. So you need to go from the monthly down. But I'm just going to walk through this just to show you what I'm talking about. Okay, so everything here on the 1 hour looks good. So it says on the 4 hour, the MACD is down, but it's strong. So let's go to the 4 hour. So on the 4 hour time frame, it says that MACD is down. So MACD has crossed to the down, has been crossing to the downside, is below the water line. So it's down. It's in a weak state. It's saying that it's strong because MACD has crossed back to the upside, but it's still below the water line. So it's down and it's strong. It's down below the water line on the 4 hour time frame. So now on the daily, it says MACD is down and weak. So we go to the daily. It says that MACD is down. So MACD is crossing down and it's above the water line. So it's moving in a state of it's not strong yet, going down below the water line in this move because we're in a downward mode. So that's what it's telling us here. It's moving down and it's weak because hasn't crossed down below the water line yet. So that's what it's all telling us. So from this vantage point, then we can then decide whether or not we should take this trade. So I'm going to go to the monthly, and on the monthly, we kind of get an idea of what's going on. So we have this huge red bar here that's signaling a change in trend, and we should be looking like we should be going down. It's an upside down pin bar. On the weekly, there's that bar. Again, this is a very odd looking bar. I haven't seen one of those in a while, George.
Yeah, yeah.
Yeah, it's a very unusual bar. So, okay, so just looking at this chart from the monthly, I just want to walk you through how I see it, how I analyze it, and how I break it down and decide on a 1 hour time frame whether I should take a trade going up. So what I'm seeing here is a move to the downside, back up and down. So what I see is one wave here in Elliott wave terms, 1 waves, 2 waves, down to 3 waves. This is a whole 4th wave move, very up and down, very choppy. We're in a 4th wave. So at this point, if this is the end of this 4th wave, which it looks like it should be, could be, we're getting the EMA is about to cross to the downside. So what that's telling me is that I'm going to grab my pen here. All right, so a 1, 2 here, down to 3, then it gyrates around in here like that up to this level, and right here we should do something like this and go down to this support area here. So that's how I'm seeing the chart playing out overall. However, of course, in between all this, we'll have opportunities to play. So let me just remove the drawings. What we're looking for is what's going on right here. So now we'll drop down to a lower time frame, and yeah, sorry about the pen I got. I'm still getting used to this thing. Okay, so the chart has gyrated across, and of course now my drawings changed from here to, it's supposed to be over here, of course. So let me just erase the drawing. Sorry about that again. Okay, so we're looking at this area here, and we want to see what's going on. So again, we have this anomalous bar. So that's on the weekly. We're looking for a move to the downside. So we're looking for a 1, 2, 3 up in here. So on the daily, again, this bar has messed everything up, but we get the move to the downside. We're starting to see the death cross on the MACD, death cross here. So right here, from the bottom, we have 1, 2, 3, 4 in here, and then boom, this just went out really quickly and back down. So that was the end of that 5-wave move, and then 5 waves move, and then we're coming down. So on the 4-hour time frame, where we had a 1, 2, 3 in here. It would have been a nice 1, 2, 3 without that bar, of course, but again, that was the fifth wave. So we have our 1, 2, 3 has to be in here now, and then we're coming down. So in here we have 1, 2, 3, 4, and 5. And so now we're looking right in here to see, is this a proper setup on the 1-hour time frame for a move back to the upside? It's telling us on the 4-hour that we've got a golden cross on the MACD, and we're almost starting to cross on the EMAs here on the 4-hour. So it looks pretty viable. We've had 1, 2, 3, 4, 5 waves down. So we should be a good play if we drop down to the 1-hour time frame. So that's the kind of way you have to look at it. And at this point now, you have to, if you decide to take the trade, if I come in a little closer again, you're looking at 1, 2, 3 top, right down to the 3rd wave, 4th wave, possible end of 5th wave. So if this is the end of this move, then this is what our risk will be. We're going to take the risk and say, okay, let's get into this trade, drawing a line across our number 2 point here, and we put our 1, 2, 3 on. So it would be like 1, 1, don't move chart, 2, 3. Okay, so there we go. And then we're gonna, you draw a line across your number 2 point like that. Your first initial entry, if you were able to see this before this all occurred, if you were able to see this move and you say you were on the second bar number 2 there, and you could get in on a retrace, which is the ideal entry, like I always try to explain to everyone, you're doing a 50%, 62% retrace. I like to go right in between. So what I do is I enter between, it's got 17782 as 62% and 17790 50%. So I just take the difference between 82 and 90, which is 8. And then I divide that by 2, which is 4. And I go 82 plus 4 is 86. So I put my order in at 17786 for a limit order buy limit order. And I would set it there. So I'd be sitting there. So my order would be at, let's get it right on, 17786, which is right about there. So that's where my order would be for my limit order. Now, if you see this unfolding and you could do this, then I would put my stop, say below number 3 point. We'll just say below number 3 point, even though we're on the 1 hour for now. It might be a bit too many pips, so you have to make that decision. This is 21 pips, not too bad. So that wouldn't be too bad of a risk, depending on, of course, what your risk reward is. On this 1, 2, 3, your risk reward is 3.5, so that's a good one. Then my next order would be if I, again, were watching and I could see this, a close above this diagonal on the number 2 would be an entry. So that would be a market order at the close of that bar. Just enter a market order directly and you're in. So now I would have 2 lots in this case, and then a third entry. And most of the time I don't do this particular diagonal because price sometimes it's not there for you to catch it. If you can, great, but I put a buy stop order above number 2 point to get in here. And so if my limit order is not hit, I still get in on my buy stop above number 2, and that way I'm in the trade, because if it's moving and it crosses number 2, you should be in an okay position to make some pips and get up to one of these targets here. So that's the breakdown of that 1, 2, 3 bottom